In this video, traders, we're going to look at the 5 important candlestick observations. Stay tuned. Hey guys, warm welcome to you. Alright, so 5 important candlestick, I suppose you could use bars, observations that we want to look at to give us an idea of what's really happening with price under the bonnet, under the hood, however we want to talk about it. Okay, so number 1 is the wick length. So candlesticks, we know we've got a body, we've got a wick, we've got a tail, we've got basically tells the high, low, open and close. Assuming you guys know that. If you don't, I have done a candlestick video exclusively talking about the basics of candlesticks. If this is new to you and you kind of stumbled across here, you're not quite sure what it's all about, check that out first, come back here. Anyway, for those of you who know about candlesticks, the wick length. So it's important to know how long the wick is. Obviously, the longer the wick, the perhaps longer the indecision has been, or the bigger move after the extension. So if that was a daily candle, it means that, hey, we've come to a low here at some point, but at whatever reason, we've pushed back up and we've closed here, assuming that's our close if it's a red candle, or we've closed here if it's a green candle. You know, the longer that wick, the further the price has gone and come back. So that's useful information. Same with the tail. You know, the tail is actually this side. I interchange, guys. I know I do. Sometimes I say wick for up or down, but tail I always only say for this side. I recognize that, but hopefully you know what I'm talking about. So that's important to know. If we're getting long wicks all the time, it means there's indecision that's changed and has moved quite a lot in direction against that initial pulse, which might indicate a turning point, might indicate change in sentiment midday, midweek, whatever it may be. So that's worth looking at, the wick length. The second observation you want to look at is the ratio of wicks to tails. Now wicks, I mean, in this example, to the upside, tails to the downside. I mean, the point here is that if you've got a lot of, let's say, moves to the upside that have failed in the middle of the candle, that could be construed as bearish. If you see a lot of times, it's pushing up in the day, but then it's closing at lows, pushing up in the day, closing at lows. That's a bearish pattern, as opposed to the other way around, pushing down the day and closing at highs, pushing down the day, closing. So if you've got a ratio where you've got far more wicks than tails, potentially, again, you've got to put this all in context, but potentially you could be saying, well, that's a bit more of a bearish pattern, a bit more of a bearish environment. I need to be a little bit cautious from doing the buying here. Number 3, the body position. So body position, the body being obviously the meat of the candlesticks, of the open and close. Where is that? You've got a couple of options, some extremes here. You've got somewhere in the middle, and even we could have another one, couldn't we? We could have the classical doji. What's the body saying? So that's really indecision. So we've got a body position right in the middle of the range. It's like, okay, well, we extended to the highs, we extended to the lows, we rejected both sides. We end up closing somewhere in the middle. And we open and close somewhere in the middle, and we try both sides, and no one really won the battle. It's a bit nothing going on, especially with that one. What about this one? This is much better. Now, before we're talking a similar candlestick, we're talking about the wick length. Now we're talking about position of the body. So if the body's right at the top, because the wick length could still be the same regardless of the size of the body, right? The wick could still have gone the same depth lower. Obviously, the range would be wider, but you could still have the same wick length. But if the body is right at the top, that could indicate some strength potentially. The fact that we did push to lows and fail, push back up, flip it on its head. Maybe if the body's right at the bottom side, maybe we tried to rally, balls couldn't keep a rally going, roll back over, closed at lows. Significant. Same if the body's massive. That would indicate perhaps a trend day. Opened at lows, closed at highs, opened at highs, closed at lows. Solid trend day. Good, solid reason to potentially take a trade in the direction of the trend the next day. Again, depending on the position. Number 4 as well, guys, the size of the body. So touched on that a moment ago. How big is it? So the position we talked about is important. The size of it, is it relatively big compared to the other candlesticks as well? Is it relatively big compared to the wick? Is it relatively big compared to the prior day, the previous week, whatever it may be? The size of the body, very, very similar, of course, to position, but it depends a lot, because if you're opening at lows, closing at highs, it's a lot different from opening at lows, pushing to highs, failing and closing at the midpoint. A distinct different type of trade environment. Number 5, the body to wick ratio. Interesting one, this. So if we look at the body size and the wick size, yes, it's similar to the wick length, but it's the ratio. If we're constantly getting all the time indecision, 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 you're going to find that the body is often half of the wick, because it's just most of the time you get that kind of scenario where it opens at highs, pushes down to lows, comes back up, tries to reclaim, can't quite, so you get that 50% of the whole range. Or is the candlestick body the whole of the range, and the wick's like a little tiny bit? In other words, it's just been a range extension day, and the wick's just been a little bit of noise kind of towards the end of the day, or whatever it is. It's a very, very small wick. Super important, because two completely different scenarios. And so you start to get a picture of the pattern and the type of environment you're in. You start to look at all these attributes for your candlesticks, for your bars, whatever you're looking at, and you start to build out a bit of a bigger picture. You start to say, well, who's in control? Are they truly in control? Yes, we were up on the day, but did we go higher and fail? Have we got a couple of solid candlesticks in a row? What's the general conditions? Have we got a lot of wicks as opposed to bodies? If it's intraday and there's a lot of wicks compared to bodies, maybe there's a lot of indecision. It's choppy market, not that exciting. What about if we have a lot of bodies and no wicks, and there's a lot of distinct movement, supply demand imbalance? Maybe there's opportunity to trade. So multiple different openings appear when we start to analyze this, guys. And I think a lot of us do this subconsciously, but sometimes it's worth kind of drilling down and going, what actually are we looking at? What is the actual point? And maybe some of you guys out there who are into your algos and building kind of robots and stuff might be able to use some of this idea in theory to code in and say, well, it's choppy if we've got a mix ratio, it's good conditions if we've got this and this. So it just opens up a few more avenues and angles to look at. Anyway guys, keep the risk manager, whatever you're doing, good trading, and see you in the next one. Bye bye.